You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. Welcome to the show, Keith.
Jim, thanks for having me on.
Oil had a nice rally in March. Are we going to see it improve again?
You know what? I actually think that the next 2 months could be the most bullish months for oil in all of 2015, and I'll tell you why. Right now, we've seen these drill rig counts fall off a cliff. So the number of rigs drilling for oil and gas around North America, especially oil, have just fallen so much. Like they're down 50% in only 6 months, and we've never ever seen a drop like that in history. So what I think is going to happen is over the next 2 to 3 months, through most of the rest of the second quarter, the amount of oil coming out of the States should go down dramatically because there's always a bit of a lag time between when the drill rigs stop and when the oil stops. So they've been stopping now pretty steadily since January. So the next 2 or 3 months, I think we could see quite a large drop in U.S. oil production. And that should, I think, really get a lot of emotion behind the oil trade. Now, Jim, I think it's important to think about one thing here, though, is that for the stocks, which is really what I'm interested in, the really good stocks are already pricing in $70 oil. So, and what I mean by that is if you give them a very normal valuation of like 9 times cash flow, they're saying that oil has to be $70, $75 for that number to work. But see, oil now is sitting here around 55, and for it to go to 65, that's a big jump. But the stocks are already pricing that in, so I don't know how much is going to be left over for investors to really benefit from an increase in oil price. And then there's a couple things on the horizon that says after the next 2 or 3 months it's probably going to flatten out. But I think for the next 2 or 3 months, every Wednesday, like today, we could see a big jump in crude prices if inventories and production start to go down, which I think should happen.
They say right now, despite the rig count dropping, output is still very high.
Yes, and so really, again, there's that lag time between when the drill rigs stop and when the oil stops, and then there's also Canada. Like Canada is still continuing to increase production a little bit because of the oil sands, so that's a bit of a negative as well. Though our light oil production is probably going to drop quite a bit because our rig count's down as well, but the oil sands production, that's not affected by the rig count, and that's continuing to stay pretty strong. Is
that because the oil sands had such a big investment, they have no choice but to keep producing?
Well, yeah, and like those plants cost billions of dollars, and they were built years ago, so the capital is all paid off. So they basically break even around $25 a barrel. So unless oil gets to $20 and people think it's going to stay there, they're going to keep producing. And when you've got such big cost items, it just takes, they take a longer term view. And the reality is, Jim, that the world loses about 6% of its oil every year through natural declines. Like once an oil well starts at 100 barrels a day, it doesn't stay at 100 barrels a day forever. First year it produces 100 barrels a day, the next year it produces 80, the next year it produces 60, then 40, blah, blah, blah. So we got to keep replacing all that oil with new production. And so, or else oil is going to go to $200 a barrel. So the oil sands knows that, and they keep producing through all that stuff.
Saudi Arabia is still increasing production. How happy are other members of OPEC about that?
Well, I think that they can gnash their teeth and stomp up and down, but the reality is the Saudis are doing that because there's demand for it. And so these low prices have increased demand for oil around the world, in Asia as well. And so they're just meeting that demand. But there's no doubt that the other OPEC players would love for Saudi Arabia not to do that and let the price of oil rise a little bit around the world. And like I say, the Saudis want to do that too. They just don't want to do it all by themselves.
And of course, they now have a war against Yemen where they're actively bombing. Wars aren't cheap.
That's right, Jim. Wars aren't cheap. Very good point.
We'll have more with Keith Schaefer right after this.
More and more people are looking to the internet. for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Keith Schaefer, publisher and editor of the Oil and Gas Investments Bulletin. Keith, you said activist investors are playing a very active role in Canada, but you said there's two categories of activist investors.
Right, the smart ones and the dumb ones. So I actually think these activist investors are a really good thing for the Canadian oil patch, Jim. You know, Calgary is a very small town. It's a very cozy group between the investment bankers, the analysts, and the management teams. And generally speaking, you're looking at a group of people who are conscientious, hardworking, honest as the day is long, and are doing the best thing they can for shareholders as much as they can. But every once in a while, something happens where people got to question, well, why is management doing that? And it's actually very rare to see activist investors. Honestly, it's really even rare to see when a company gets taken over any kind of competing bid. It's just not. It's as much collegial as it is competitive in Calgary. So what we've seen in the last 6 months is four pretty high-profile groups really come into the fold. One of them is a group out of New York called Front 4, and they've just launched their second big activist run against legacy oil and gas. And Front 4, the front man for Front 4 is Zach George, who is Rick George's son. Rick George being the CEO of Suncor for many, many years, one of the most powerful men in the oil patch, and his son, a young 35 or so, is had some success in Canada. You know, he was the lead guy last year behind Renegade, getting Renegade's management team ousted and getting that company sold to Spartan Energy. And Spartan did wonderful things with those assets. They increased production they basically tripled production out of the same group of assets than what the Renegade team was doing. So that was a very successful activist investor intervention where they saw that management wasn't able to really even formulate, much less execute on a smart strategy. They went in, they convinced the street to get behind them, and they ousted them and created a lot of value for shareholders. Then you've got the opposite side where you've got a group called Orange Capital who has gone after a company called Bellatrix and really just bought a lot of stock at the top of the market, didn't have what I would consider a really intelligent strategy for adding value. Bellatrix was already one of the lowest cost producers in Canada. They had a great land position. They were doing a lot of things right, though they had some joint ventures, I think, that were a little more dilutive than what the street would have liked to have seen, and they kind of went after that angle. And they also went after an angle where they really wanted to see the company sell their infrastructure, their pipelines and processing plants for a very high cash flow multiple. But the problem is, Jim, that when they got in to do all this stuff, the geology was working great already, and it's tough for the street to get behind an outside activist investor group when the geology is doing great. And when it came to all that infrastructure being sold, the street had been telling these Canadian producers for the last 2 years, hey, you need to own your own infrastructure so you control your own destiny. You don't want to have somebody else owning the pipelines and the processing plants so they can just shut you out. So the street never really got behind Orange Capital, and that stock is down 50% for what they paid for it. And they did get a board seat, but nothing, and they did sell a little bit of infrastructure, but nothing's really changed. They certainly have not added any value for shareholders. So it's just sometimes you win, sometimes you lose with these activist investors. And then just literally today, there was a third group get in called Westface that is going after a company called Grand Tierra. They're a Toronto-listed but Colombian-focused energy producer, and they just fired their CEO here a little while ago, their founding CEO, and they're going in there saying, we want to shake things up, bring in a new board, and put in a coherent strategy. So we'll see how they do. They just announced their intentions yesterday. But that is a situation that has kind of got a little messy lately, and whether they have the ability to provide some strategic turnaround ability there remains to be seen. But overall, Jim, I think it's good. It's good for the street. It's good to see this little group of this cabal of management brokers and analysts kind of gets shaken up a little bit. So overall, I'd say it's a good thing for the market.
Natural gas, a difference between what's really happening and how stocks are doing.
Yeah, like that. Natural gas is a little bit of a conundrum right now, and that is that every week we're getting very high injections of natural gas into storage, meaning that we're producing so much natural gas that we're using it all and having to fill up storage. And, of course, that happens every year, but we're filling up storage a lot faster this year because we're producing so much more gas. And yet the stocks, Jim, are treading water to trending higher. And I don't know if that's kind of a sympathy trade because oil has had a nice run here in the last month, but the natural gas stocks are actually hanging in really, really well. And even the natural gas price, in my mind, is hanging in really well. Like I would have thought we're sitting today at around 260 an MMBTU, which is a British thermal unit. So that's way higher than I would have thought at this time of year. Considering how strong production is, I thought gas would be way closer to $2, if not under $2. So it's just kind of interesting to think about now, what is the street pricing in if gas is not collapsing in the face of all this production?
Is there a move to use more natural gas for transportation because it's so much cheaper than diesel?
No.
No?
No, the reality is, Jim, you do see some gas going on a little bit more, but it's such a thin edge of the wedge. The gas bulls might even say, hey, it's doubling every year, and I don't know what the stat is, but it's coming from such a small base. Even at its current pace of growth, it would take a decade or three for the transportation side of natural gas usage to have any real impact. What's driving it these days is utilities. You know, the price of gas is low enough now they're actually starting to switch over and use some natural gas. I guess the big problem for natural gas bulls is that coal is the main competitor for utilities, and coal prices are just getting lower and lower and lower. And really that's more what the floor price is for natural gas, is what the coal equivalent is, and the coal price is just getting lower and lower and lower.
What about the advantage natural gas has? It doesn't pollute at all like coal does.
And that's why you're seeing coal get so cheap, because fewer people are using it, and it's not as clean. And certainly this administration is very much against coal in the U.S. But it still there's still a lot of coal being used around.
What kind of an impact on the BC LNG market has this big Shell takeover done? You know,
there's a lot of talk about what kind of impact that's going to have, and I just don't think it's going to have any impact at all. Obviously, the BG facility is probably dead in the water now, though I think it was before. So the street had already kind of discounted that particular project was not going to go ahead, and that Shell's would go ahead. So I think that we're in a situation now where certainly that one pipeline that BG was going to take to the coast isn't needed. But I don't think this is going to change Shell's plans for Canada one bit. I think they'd probably just mothball the BG asset and or initiative, which, like I say, the street had already discounted was not going to go ahead anyway. I honestly don't think there's going to be much impact at all out of that.
What about China's position on liquefied natural gas? Are they still very keen on it?
Oh yeah. You're going to see imports for there pick up quite dramatically, especially now that prices are falling so dramatically. Like it was $18 an MCF here a year ago, and now it's down to like 10 or 11. I think the odd day it's even under 10. So,
and of course, in China, they are very concerned about air quality, considering their life expectancy has fallen by 6 years because of the air pollution.
You know, I've never been over there, Jim, but when I talk to friends of mine who have, it's pretty scary.
Yeah, well, a friend of mine had spent a month in Beijing was still coughing up chunks 2 weeks after he came back home. Mm-hmm. I mean, it's a gross thing to say, but it's absolutely true.
So interesting. Yeah, it's very interesting. So again.
I mean, they still use coal-powered steam engines in China, for goodness sakes.
Wow, steam! Holy moly! I know my own wife was quite aghast to learn that half to two-thirds of the world still gets their heating and power through coal. She thought that went out with the Industrial Revolution in the 1850s. No, coal is very real all over the world.
Except here.
Except Canada. That's right.
Keith, thank you very much for chatting with us.
Jim, God bless you. Look forward to speaking again.
Our guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.